Hello, welcome back everyone. Today we're going to continue with chapter 8 about buying, insuring, and financing a car. And in this video, we're going to go over auto insurance. Let's get started. From a financial planning perspective, the purpose of insurance is to protect your wealth and your equity. There are also legal responsibilities that come into play. Let's take a look. Most states have something called financial responsibility law. The purpose of these laws is to ensure that if an accident does happen, the person causing the accident will be able to take responsibility for the damages that they cause. To satisfy this requirement, a lot of states will require drivers to purchase liability insurance. These type of laws vary greatly state by state. Most states require a driver to buy some type of insurance. Other states, such as New Hampshire, simply requires the driver to say that, yes, if I don't have insurance, I have the financial means to make restitution. Some states have what we call no-fault auto insurance laws. In these states, each insurance company pays whoever purchased the insurance based on their policy, regardless of who causes the accident. No-fault insurance states allow reimbursement to be faster because the insurance company does not have to establish a fault before they make payment out to the policyholders. States that are at fault, then the person who get injured will try to get the insurance for the driver who causes the accident to reimburse them. In a no-fault state, the driver can claim reimbursement from their own insurance company, and then their insurance company will try to get payment from whoever causes the accident to reimburse them. So it can be faster and less hassle for the purchaser of the insurance policy. Take a moment to look up the financial responsibilities law for your state and whether or not your state is a no-fault insurance state. The next thing we're going to go over is the type of coverage that an auto insurance policy provides. Typically, the insurance policy will cover injury to others when you are at fault, and damages to their properties, which may be a car or even a fence or any structure, again, when you're at fault. Some of the coverage will include injuries to yourself, so medical bills that you incur, as well as damage to your car. We will go over each of these type of coverage in detail. Liability coverage means that the insurance company will pay your liability. Liability is things that you owe, so you owe the injured party whatever injury you cause. Something that is important is that it's different to the definition of at fault. Negligence is sufficient to make you responsible for an accident or deemed at fault. A common rule of thumb is that if you hit someone from behind, there's a good chance that you are considered at fault, even though there may be a lot of circumstantial reasons why you may end up hitting the person. Most liability coverage has 3 components. The first is bodily injury coverage. So this covers any medical payments, including as well as legal expenses, and if they cannot work, lost wages. So this is liabilities due to injury that is sustained by the other party. The second type of coverage are property. So this is the person themselves, and this is the property damage. So this covers property which oftentimes is the other person's car, or whatever you hit. So it can be a fence, it can be a house, it can be a motorcycle, it can be a car. The insurance has a limit. So this is how much they will pay. Oftentimes they are listed in this format. The first number is the amount of personal bodily injury in an accident, and this is per person. So 100 means 100,000, and the second number is the total amount they will cover per accident. So 300 means 300,000. So the other person's car may have 5 people and is $100,000 per person, but in total, the limit is $300,000. And then the last number is property damage. So it's $50,000 for property damage in this particular policy. This is required in most states. Again, not every single state. The minimum amount that is required does vary state by state. This is the amount that will be paid by the insurance company. If you are the person who caused the accident, you are still responsible for all injuries beyond this amount. Let's say the property damage that you purchased has a limit of $50,000. And you happen to hit a luxury car whose value is $80,000, you are still responsible for the $30,000 that is not covered by the insurance. In addition to buying liability insurance, you can also purchase what we call no-fault insurance or PIP. PIP is personal injury protection insurance. This type of insurance covers damages to you. So your own insurance company will pay for your expenses due to injury, regardless of who is at fault. However, remember that if you are at fault, you can still be held liable for the other person's injuries. No-fault insurance or PIP insurance is required in no-fault state. In other states, they are optional. So if in your state is optional, you can avoid or skip not buying no-fault insurance or PIP insurance. In that case, you're relying in an accident. If you are at fault, then your own injury will not be covered. The minimum amount of required coverage also varies by state. So far, we are looking at from the perspective if you were the one causing the accident. So if you were the one causing the accident, your liability insurance coverage will pay for injuries or property damage that you caused, and PIP will cover damages to yourself that also you caused. However, what happens if you are the victim of an accident and you are not at fault? Then hopefully the other person will have insurance and their liability insurance will cover your damages. However, what happens if the other person does not have insurance or if their insurance coverage is insufficient? Then you can protect yourself by buying uninsured or underinsured motorist coverage. So uninsured means that your insurance company will cover the cost of injuries and damages to you when the other driver who is not insured or if they are not identified. So in a hit-and-run situation, that this will be one of those circumstances where your own insurance company will cover your damages. This is required in some states. Underinsured motorist coverage, this is the case where if there are injury to you and your passenger and the other person's insurance is not sufficient to pay the full amount, then the underinsured motorist coverage will pay whatever is up to the policy limit, the amount that is not paid by the other insurance company. Underinsured and uninsured motorist coverage take care of damages to your person, the medical expenses. Collision and comprehensive coverage takes care of damages to your car. Collision coverage will cover damages to your car when you are the one at fault. And comprehensive coverage will pay for damages to your car from other accidents. So this can be flood, fire, theft, hail. All these are actually quite common occurrences in New England. If you have a loan or a lease on your car, the lender will typically require both collision and comprehensive coverage to protect the value of the secured asset, which is your car. Here's a sample declaration page. This is the first page of an insurance policy. This is from your book. And typically it tells you what time period you cover, your name, all the drivers that's on there. And Here is the limit and deductible. So liability insurance is $300,000 per person, and for a total of $500,000 per accident. So it says that this is the premium. The property damage liability is $100,000, and here is the uninsured motorist coverage. Again, is per person and per accident. Comprehensive insurance, there's a $100 deductible. So if you get a stone chip on your windshield, you can get that replaced by paying $100, and the insurance will pay the remaining. Collision has a $1,500 deductible. That means if your car get into an accident, then you have to pay $1,500, and the insurance will cover the rest of the repair to the car. Emergency road service, full coverage. So this includes tow trucks. Next, let's take a look at what factors may affect your insurance premium. Your personal factors is actually very important. Your age, driving record, and mileage, and where you're located. Age, unfortunately, is a huge factor. Anybody under the age 25 can expect to have a high insurance premium. And a bad driving record is really important too. A single speeding ticket or DUI, driving under the influence, will increase your insurance premium significantly. For those of you who are under the age of 25, there is also good news. You could get a good student discount if you have good grade in school. And interestingly, your credit score can affect your insurance premium too. Remember that lenders use credit score as a proxy for character. So again, your character, are you a responsible person? That affects your insurance premium. Another group of factors that will affect your insurance premium is your car. The year and make and model that affects the collision repair costs. And again, sometimes our assumptions may not be what the actual experience is by the insurance company. How often the type of car you drive may get stolen, that also affects the insurance rate. Sometimes a relatively inexpensive car, but they seem to be the target for thieves, they may have a high insurance policy. So you may be surprised to find that insurance premium are not directly correlated with the price of a car. The last factor that affects your insurance premium is the amount of deductible. Deductible is the amount you have to pay before your insurance provides the coverage. Higher deductible will usually reduce your premium. Let's take a look at the sample policy again. So here are the premium based on the amount of insurance that they have chosen. There are 2 cars in this sample. These are the discounts that's available. Some are relatively interesting. Anti-lock brake is a safety device. If you do not have lapses in your insurance, so continuous insurance is a discount. Seatbelt is a discount, it's 99 cents. But the most important discounts are good driver discount if you don't have any driving tickets. And then the other is a multi-vehicle discount. So if you have 2 people living in the same household and you drive each other's car and you put both cars on the same policy, you can get a discount. Now, in here, it did not specifically say how much discount you get for financial responsibility. So this is a code word for your credit score and your driver experience. It simply says that it's applied and included. What do you want to look out for when you are choosing an insurance policy and also the agency? You want to decide on the type of coverage and the amount of coverage. The type of coverage, first of all, is dictated by your state. So you have to have at least the minimum. And if you take out a car loan, then the loan company will require that you have collision and comprehensive coverage. The amount of coverage depends on your personal circumstances. You do not want to lose all your money because you get into an accident. A common recommendation is 100, 300, 100, so that means $100,000 in medical expense per person, $300,000 maximum per incident, and then $100,000 in property damage. What should you choose as your deductible amount? This depends on the specific individual circumstances. A recommendation is to make sure that you choose a deductible amount that is well within your emergency fund. There are other things that you can add on to your policy, and they will cost additional. It all depends on whether or not that is useful for you. Towing expenses. Another important one is rental car reimbursement. Ask yourself, can you live without a car? Because if you do not have rental reimbursement while your car is in the shop, especially if you are the one at fault, then you have to rent a car, and that can add up very quickly. Get multiple quotes and negotiate with the insurance company against each other. Here's a tip. If you do go car shopping and insurance shopping, you may want to create a Google account that is specifically for that purposes, so that your primary personal account is not bombarded by future advertising emails. When choosing an agency, think about how you would like to interact with them. Do you want to have a local office and agent that you can talk to in person? Or are you comfortable doing everything online? So some insurance agencies, remember, agencies are the company that sells you this policy, and they do a lot of the servicing. So when you change your policy, when you have questions, you talk to the insurance agent. And some of them are online only, and some of them provide in-person service. The underwriter is the companies that underwrites the policy, meaning that the underwriter is the one who will make the payment if an incident happens. Some underwriters have a limited choices of policy. So when you choose an underwriter, you may want to choose one that has the type of policy that you're looking for. The most important part of an underwriter is whether or not they will pay out when an accident happened. There are financial rating agencies that provide ratings for insurance companies. These are the four most common agencies: Moody's, Standard & Poor's, Fitch, and AM Best. They give ratings that are A, AA, AAA, B, BB, BBB. You want to look for an insurance underwriter that has a rating of at least an A. Do not settle for anything less than that. Remember, you're paying the premium, and if when you need it, they don't have the money to pay and cover your the damages, then you have just wasted all your premium, and you'll be personally liable for those damages. Remember that you're purchasing insurance to protect your financial well-being. In addition to financial stability, you also want to have an underwriter that has good customer service. There are actually several agencies that you can find how well they perform. This is the National Association of Insurance Commissioners. So this is their self-governing organization. They provide number of past complaints, financial overview report. If you do end up having a poor experience with an underwriter, you can actually file your own complaint. And another non-government agency that oftentimes provide information is the J.D. Power survey. You have probably heard of the name before. J.D. Power does surveys on not just cars, they also survey car insurance companies. The last thing that you want to choose again is whether or not you are comfortable with online and mobile service versus an underwriter that has an in-person office if you need to file a claim that you can talk to someone in person. Hopefully, you'll never get into an accident. Unfortunately, depending on where you live, chances are you may have at least a bumper tapping incident. You may want to bookmark this page or print it out and put it in your wallet. Here are things that you want to do. This is a checklist. During an accident, you may be very confused or because you just get a concussion. So it's important to keep in mind to check all these things. Obviously, contact the police and get information from the other drivers, including their insurance information. If there are witnesses around, get their contact information as well. Today, cell phones are everywhere, so make sure that you take pictures of the location, damages to your car, damages to their car. Write down any details of the accident as soon as you get home. You will forget very quickly. Get a copy of the police report and file a claim with your insurance company right away. And if the other person is at fault, file a claim against their insurance company as well. Very important, you want to save all receipts. So this includes towing. This may include taking a Uber to go places. Save receipts for any expenses, particularly if you are not at fault, so that you can submit it to the insurance company. Now you have all the information you need to go car shopping. Just because you have the information doesn't make the process any stressful. It is normal to feel stressed when you are going car shopping. The best thing is to do as much research as you can at home, and then you can obtain quotes from insurance company, get your loan pre-approved, and print out all the information you have before you go to a car dealer. Most importantly, stick to your budget. Do not tell the car dealer how much you can afford per month. Tell them what your out-of-door cash price budget is. That's very important. Remember to tell them your out-of-door cash price, not your monthly payment. Shop among dealers. Remember that dealers want your business. And if you do have a car to trade in, don't tell them that you have a trade-in car until the price has been settled. So ask the dealer to quote an out-of-door price that includes everything. Tell them that this is the price in writing so that you can go back. So the reason why you want an out-of-the-door price is because there are some costs and taxes such as destination fee or delivery fee that is not included in quote unquote the price. So make sure that you get this in writing, how much it costs me to drive out of the door. Do not talk about monthly payments. It may not be the easiest thing to do, but negotiate. You are spending tens and thousands of dollars on an item. Usually you can negotiate with prices. If you cannot, then choose the cars that you like. One of the best thing I've ever done in car shopping is to bring a friend who understands my goal and my strategy. They know what my budget is, and they are there to help me write down things that I may not remember. So when you go car shopping, write down what you like and don't like about each car as soon as you are done test driving. Remember, the total cost, it includes ownership, includes insurance and depreciation and operating costs. Do not worry that the car won't be there. When you're making such a big purchase, it's a good idea to wait at least a day to make your final decisions. Here are some red flags to watch out for from a car dealer. If the salesperson asks you how much you can afford per month, avoid that question. Tell them what your total budget is. If they say you really like the car, we can hold it for a small deposit. Remember that there's always a right car for you. If they want to sell you things that you don't really need, including extended warranties, you want to turn that down. They will sell you anyways, but if they are very persistent, that can be a red flag. Be very cautious if they say, "Oh, we can lower your monthly payment. Just switch from a 4-year loan to a 7-year loan." Those are things that are not in your best interest. So now that you have all the information and the tools, you can be a smart car shopper. This concludes Chapter 8. I'll see you here soon in the next chapter.